Straight up to the crude prices, which are trading higher today but remain stuck in a range. Investors are buying the Brent, which is hovering around $118 per barrel as confidence over global recovery improves. Also, the ongoing tensions in the Middle East are supporting the prices. Brent on your screens there, 117.80 is how that one is trading, while the NYMEX crude price is in red, 0.25% of a decline coming in for that. The gold, in the meanwhile, is seeing some buying interest as well today as investors are buying into the metal at lower prices. Gold prices has come off their 6-month low. It hit earlier in the Friday markets there. We did see prices tumbling all the way down to 1598, but 1615 is how that one is trading in the European markets right now. Let's get in then. Vibhu Ratandhara, he's AVP Commodity Research Bonanza. Also joining us is Vijay Bambani. He's author and CEO at bsplindia.com. Vijay, what's your sense coming in? Because we did see a breach of 1600 on charts on Friday. Of course, trading positive at this point in time. But what's the kind of levels you're working with?
Manisha, let's stick to the MCX levels here. Unless we see gold on the MCX trading clearly above 30,600 or 30,650 levels, I don't think the bulls are back in action here. What you might see is a short covering based kind of a relief rally taking place in gold here. But clearly the 30,000 threshold is not only just a round figure or a psychological threshold, but it's also likely to impact the bulls negatively because they've paid cost of carry. They have nothing to show for it, and the prices are down mark to market. So I think the overhang of overhead supply is likely to inhibit any kind of an up move, and I would still maintain my view that staying off purchases in the leverage segment seems to be the only sensible way out.
All right, let's get more idea on gold, and for that, let's go across to Bhargav Vaidya. He's proprietor BN Vaidya and Associates, and he joins us on a Mumbai phone line. Mr. Vaidya, hi, welcome to the show. What's your sense really coming in for the gold prices? Because while there is a decline in the international markets because of rupee depreciation, the calculations here more or less have remained the same.
I do expect gold to come down internationally and rupee also to strengthen a bit. So we may see Indian gold prices for a small time in sub 30,000 levels also. And this may encourage a bit of local buying, and maybe around 29,500 may be a good buy.
Also, lots of people are expecting that the kind of run-up that we have perhaps seen in last decade may not be repeated in 2013. What kind of gains are you expecting for this year?
I would expect that we will just be able to beat the inflation. So I don't see a major run. If the inflation is say around 8%, the return will be around 10%, maybe 2% above inflation level. We may get a shock from the duty perspective in the budget. I hope I am wrong. That is not adjusted, so I don't expect a duty hike. A return on average year-to-year basis should not exceed 10%.
What's the scene with silver? Are you expecting a similar kind of slackening there as well?
Yeah, I'm expecting a bit larger slackening in silver. Silver, as I'd like to say, that for retailers, they should stay away. We may see a level of around $27 also international market. And in the Indian market, we will see a level of something around 51, 52 also for a very small period, which will be a very good investment opportunity. But yes, I see a bigger fall in silver.
Your point is well taken, Bhargav Vaidya. Thank you so much for joining us. So a bit of a slackening is what you can expect in gold and silver. Of course, those bottoms would be a good time to start getting in. Vibhu, how would you want to trade the precious metal space for the very near term, though?
Definitely. The run-up is likely to be on the downside only. Technical chart is on the weaker side. What we had seen last week, US data, job data is quite impressive. Again, this lead an indication towards the QE3 by the Fed, and this might be pressurize the precious metals in the coming days also. Absolutely, I am expecting gold and silver somewhere around, particularly for the gold, somewhere around 29,800 in the short while, or I can say silver somewhere around 55,500 to 55,200 level in the short while.
Vijay, how would you look at the crude prices? Because we have seen some strength come back into that space, but the kind of data that the market has been seeing seems to be really pushing or pulling crudes on both sides.
You're right, Manisha. I would maintain 52.25 as a trend determining level of sorts. Although last week we did see a short period of time when crude traded above this level, even closed above this level, and volumes expanded for a brief period. I would expect the overhang of supply to remain at this point in time, and now the threshold for a breakout has become even higher because the bar is now raised higher. Now crude will be bullish only if it stays above 52.45 or 52.50 and not 52.25. Till then, there will be a gradual decline or maybe even a sideways consolidation. I don't expect it to collapse below 5100 either. I think 5120 to 5140 will remain a support at this point in time. But in the absolute near term, it's a sell on advances rather than buy on dips.
Vibhu, would you concur with that? Because the kind of decline that we have seen in last couple of sessions continues today as well.
Definitely. I think the level is quite a correct. 5120 is looking quite a good support level. And as long as geopolitical tension is there, or I can say a few of the data last week, which is from the China, or I can say from the US also, looking like quite supporting the crude prices, energy prices, particularly for the crude. And my view is same, 5120 is very strong support level. As long as it's hold about the same level, the probability of breaching 52.45, what Mr. Vijay said, or I can say 52.75 is quite a higher. So my view is we can take a buy call on the dips with the stop loss of 51.20.
Vibhu, also what's your sense coming in for base metals? Because much of the market was expecting that the prices could run up after the Chinese participation came back. But today, the first day of that, and we have seen very sharp declines, more than 1% down for most of those base metals. And same is the case with MCX as well. How would you want to trade a copper today?
Yes, definite. After China Open, we had seen quite selling pressure today. That is because of the weak European indication. Most of the analysts are expecting the European market was for the last quarter of 2012. It might be again towards the recession side, and that's pressurizing the base metal prices. But I think this is quite this is for the short term view. We can for the short to medium term view, I think we have to take a buy call in the deep for the base metal, and particularly for the copper. 438 is a very good support level as long as it's sold about the same level. I think again it's potential towards somewhere around 448 or 455 level. So my view is to take a buy call in the deep with a stop loss of 438.
Vijay, how would you want to trade that, especially a zinc or a nickel, which had run up quite strongly, but today, of course, most of those metals seem to be giving up the gains?
Manisha, on Friday I talked about wanting to see these metals staying above their swing highs, only then venturing out on the buy side. So seeing the kind of small pullbacks in these prices, it's not really inspiring any great confidence. Now the 990 to 994 level on nickel will become a resistance. Unless you see this level being overcome very forcefully, I think the bulls will prefer to unwind at higher levels. Zinc, I had talked about 116 being a floor support in the absolute near term. It's very close to that. Should it breach 116 and close below that, I think in the absolute near term, the short term trend gets fractured, the uptrend gets fractured. Where lead is concerned, I would watch the 128 and a half band. If it closes below that, even lead is likely to remain under pressure. So right now, I would rather buy a breakout and lose out on a little bit of a profit by not buying right now. I would await a breakout, and then it's like buying insurance. That way, I'm kind of assured that the momentum is strongly on the upside.